Good morning, traders. This is a live trade recap. I took 4 trades this morning, and I am green on the day. I had 2 winners, 2 losers. This is showing red because of my SPXL swing trade, and the S&P 500 is pulling back right now. So that's what that is. Now, this is really important. This is a brand new market open trading plan that I just finished developing last night. And it's based on the one that I've been trading. And the reason why I've made some tweaks to it is because the other plan is a good plan. I know it'll work in a market recovery after a pullback, which looks like we're heading toward. But until that time, I know it's going to be at best break even, slightly profitable, maybe slightly losing. So I figured instead of just continuing to test trade that plan, which isn't really designed for the current market, let me make some slight modifications to the plan and make it more appropriate to the current market conditions that we're in. So you can see right here in this highlighted text, this plan's to be used when the markets are trading at all-time highs, sideways, and choppy. And that's exactly what we're dealing with right now. So the other plan is more for a recovery. So this is still basically the same strategy. I mean, the same risk management for sure, all or nothing 2R. That way, one winner knocks out 2 losers. One of the big differences is this is trading mid-cap stocks. It's using a different screener criteria, and the entry criteria is about the same. And I'll explain that in just a second. So let's go over the plan a little bit, and then I'll show you the trade. So this stuff is pretty much the same. Check the internet connection. I added this unlock platform because I've just forgotten too many times. I go in to hit my hotkeys to buy, and it says unlock platform. So I just added that to the plan. Read through your plan. That's obvious, but these are the things you have to write down in your plan especially when you're newer and you aren't disciplined yet. And I'm pretty disciplined at this point, but I'm just trying to set a good example for you guys. But these 2 things I definitely need to read every day. It's always possible there'd be no trades to take. That's something from an old plan that I didn't have in my previous plan that I've been testing. And I decided I need to remind myself about that because I know I've noticed lately, because the market has been so crappy, to be honest, that I've been kind of looking for trades right on the edge of my plan just to take a trade, and that's never a good thing. So I just wanted to remind myself it's always possible there will be no trades to take. So if something doesn't meet my plan and my criteria exactly, I don't trade it, and I'm happy with a no trade day if that's what the market has to offer. So all of this stuff is pretty much it's exactly the same. This is the same plan with slight modifications. I'm just going to point out the modifications. So the max share price is $100, and that's because with the mid caps they can be a little bit more expensive. So the price range is $5 per share to $100 per share, and I'll show you that in the screener in just a second. All of this is the same. Now this is where things change quite a bit, the screener criteria. So I'm using a mid-cap screener in Webull, and I'll show you that right now. It's actually using the custom screener, which I don't normally use, and I'll show you the best way to use that because it is a little bit tricky, especially if you're new. So this is really crucial, and I'll show you this exactly what I mean by that. Click on the 3 dots and select modify, or the filters will not be applied. So if you come here and you set up a custom screener, I'll show you my criteria and I'll explain why I have it set that way. But this is the Webull custom screener, and here is my mid-cap screener right here. Let's click on modify, and I can show you the criteria. I'm going to say this: the less filters you have, the better. So you can see that I only have the market cap filter and the price filter. They have percent change, they have volume. All of that stuff is going to mess up your screener, and you can still filter by volume and percent change, and I'll show you how. So, but this makes sure that you don't miss any stocks. So we have the mid-cap screener. The first thing you have to do once you have this on is, let's say you open up Webull and you just click on your this is probably not going to show prove this right now because this has been open, but if I click on, let's say, my small caps, which should only go from $1.50 to $50, and now I click on price to organize by price, you see that it's showing stocks up to $100. Why is that? Because it's still using the settings from my mid-cap screener. That's just how Webull has this screener thing set up. I will email them at some point and let them know they need to fix that, but I want them to focus on fixing the charts right now. This is not that big a deal, and I'll show you why. If you want to switch from one screener to the other, all you have to do is click these 3 little dots. This is why it's in my plan. Click modify, and then watch the screen over here. You see how all of criteria just changed, and now it's showing me the right thing. And I could go back to this screen if I want, and it won't matter. It's going to show me the price range of the small cap screener. If I click on the mid cap screener, it's still going to, oh, actually it worked that time. That's interesting. But let's see if it'll go back. No, it didn't. It didn't. It just for a second there. So this is exactly what I expected to happen. If you want to go back to the criteria of another screener, you have to go back to modify. Yeah, it's a little bit of a pain. Like I said, I will. And there you see how everything just moved. So now we're back to our mid-cap screener. That's just what you got to do until we get a chance to fix that. Right now, I want Webull tech support to focus on fixing the charts. So that's my mid-cap screener. And you can see the market cap is 2 billion to 10 billion. That's directly defined on Investopedia for mid-caps. And the reason why I'm looking at mid-caps is because typically, and this is something we've got to test this. I can't say this for certain. We'll know for sure after 100 trades, but today, so far, so good. The mid caps should be a little bit more reliable, less volatile, and the pattern should be more reliable during market conditions like this. So let's take a look at the trades right now. Oh, the other thing, so once I have my screener up, and again, I have this open on my laptop for screening, I organize the list by volume, and then I only look at the stocks that are trading at above 1 million shares in volume. So at the very beginning, at the market open at 9:30, there's only a handful of stocks trading above 1 million shares. As new ones come up, I'll look at them. But again, we only have to look at the ones that are running, and this is why you don't need the percent change. You could just look quickly at the green stocks and check those. Now, my next thing is to put them on my charts page, and I do that kind of one by one, but I had that screener open on my laptop, so I put them on my charts page, and I have my charts page set to the daily chart. So here I'm checking. The first criteria is that the stocks must be trading above the 200 MA. So I have my 200 MA set. I have you could set that here with the indicators, MA, and then you want to make sure that they're all linked together. So I think if I click on grid, yeah, so you see click on indicators, and then it'll make sure that whatever indicator you set up, it'll show up on every single chart. So you can see on the daily chart that every single one of these stocks is trading above the 200 MA. That guarantees that the trend is up in the long term. It's an upward long-term trend. So that means that there's some strength, there's some buying interest, and a long position should work out, say, more often than not, or at least enough to make you profitable with good risk management. So we've got the daily chart criteria. If any of the stocks, like there was one, I think Wish, that's number one on that screener, did not meet that criteria. Actually, there's no 200 MA because it's a newer offering. So it only goes back to December 16th. So I guess it hasn't even been trading for 200 days, but you can even see that it's in a downward trend anyway. So there's no 200 MA. It's in a downward trend, so no reason to have it on the list. Not sure what, I think I had two up there before. Whoops. So that's that. Now, the next thing is once these pass the screener criteria, the 200 MA screener criteria, then I move on to the 30-minute chart just to check where the previous high was. And then I mark out the previous high. That's what these are over here. I guess I didn't do it on two. Oh, I don't have extended hours on right now. Earlier this morning I did. Yeah, there it is. So 8:49. So you can see this is, so what I'm looking for here is, okay, what did it do in the pre-market and previous day? And then whatever the high from those two sessions, that's what that yellow line represents. And my criteria is that the stock must be trading above that line before I can look for an entry. And looks like, okay, yeah, TIGR. I guess I didn't mark that one. So anyway, once they're all marked, I go back to the 1 minute chart, and this is where I look for an entry. Again, if, so for example, CLOV is not trading above its previous high, so there was no entry to look for there. And I believe same thing on two. Yeah, there's the previous high. FSR, it is right now. It wasn't when I was trading it. It was just kind of teasing the previous high. So there were no trades on that one. And FUBO broke out through the previous high. It came down and pulled back, and it did give me a couple of entries, and I'll show you those. This one was, this had one winner, one loser on it. I'll show you those trades in just a second. And then SPCE was another one that triggered my entry after this pullback, and that one was also a winner. And then TIGR I guess I just looked at it because, yeah, I remember just going back and here and seeing 25.12 was the previous high. So I knew that if it was trading above 25.12 that I needed to look for an entry, and it did. I'll show you where that is. Let's see, where's 25.12 is right there. So the first entry would have been for the break of this candle, and then the price did go up. Actually looks like, I'm trying to see, is it still on my 2R calculator? Yeah, so this one, I think I entered an error. So this one, I'm going to have to like put a special note on the spreadsheet for that because, let me just double check. Yeah, so this one was an error entry because this thing already hit 2R and I shouldn't have entered it after that. So this would have been a winning trade had I not missed my entry, but I did. And then I took the next entry after a pullback thinking it didn't hit the 2R, and I just realized that now. Again, that's why it's so important to record your trades and check them afterwards. The high was 25.89, and I did type in where my target would have been to see if it did trigger the entry. 25.68. Let me just double check that's correct. 25.36. Is that, yeah. So that, yeah, this would have been a winning trade if I would have entered here, and I didn't, and then I got in on the pullback thinking it didn't hit the 2R, but it did. So that was a mistake on my part. I'll show you that in the video. So the win rate today actually would have been 75%, or let's see. No, I would have taken 3 trades and won 2 and lost 1, so it would have been 66%. But instead it was 50%, but still a winning day even with the mistake. So let's take a look at the live trades now. At first, I was just checking the 1-minute candles. We'll watch a new one form here. You can see the time. It's 2 seconds, 1 second, and there's a new 1-minute candle. So it was looking like, now this one delayed. I just noticed that now, but I would think I was watching MTP. So again, Webull has not fixed the 1-minute chart glitch, and maybe that's a sign there, but it was looking much better than it has been. So I decided it was okay to trade because before the previous candle was changing. Oh, there it did right there. Again, things you don't notice when you're looking live. So there was a pretty serious glitch there. But at least the main thing is the range of the candle didn't change. In the video that I made about the glitching, the entire range of the candle disappeared, and that's what's a really big deal because the body doesn't matter so much. It's the range of the candle that triggers entries and exits. So again, I didn't notice that when I was getting ready to trade today. But anyway, let's get to the trades. So, okay, so here's me, doing everything that I talked about. Checking the previous highs, checking the daily, all that kind of thing. All right, so now here is FUBO broke out above the previous high. So right now I'm looking for an entry, and my entry is the first 1-minute candle to make a new high. Still trading the ABCD pattern just like before. So here we go. The high of this candle is, oops, let me pause it when I was hovering over that candle. High of this candle is 30.09. I think it actually updated to 30.10 at one point. So, but at this moment, I was looking for 30.10 or better. Now you can see it triggered. So I guess it was 30.09. So I got in at 30.10.7. So pretty much a perfect entry. Webull entries are very fast, very accurate, but you do have to have volume there. And if you're trading with a whole bunch of shares, and you're not using the proper order types, you could get slippage if the shares aren't available. That has nothing to do with the broker's execution speed. That has to do with liquidity. So you have to make sure that you're trading liquid stocks, meaning that there's a lot of volume. So as I said on my screener, I organize by volume, and I only look at the stocks that are trading with above 1 million shares. So, and right at the open, that's a decent amount. As the day goes on, of course, the number of shares traded should increase quite a bit. So this one I get stopped out on. It takes a little bit, so let me fast forward. The other nice thing about these mid-cap stocks is they tend to move slower than the small cap and low float stocks. So things are just a little bit easier. I did move my stop up to the appropriate level, which was I just used the bottom of this consolidation area since this was almost a sideways move instead of the low of the previous candle. Give it a little bit more room. It was only a few more cents. And use the 2R calculator as always, which is downloadable from the Facebook trading group by the same name, Trading Armor. So this trade is going to stop me out. This is the first trade of the day. Let's just fast forward. I did go to my SPXL swing trade and move that stop up. And then actually while I was there, so let's just look at the order notice. So I figured I was going to get stopped out, and I knew everything was taken care of and no entries were coming at any time soon. So I just went ahead and modified my stop on my SPXL swing, and then you saw the alert. I think it's not, there we go. That was the sign that my stop had been hit. So no big deal. That's the nice thing about bracket orders. It's all taken care of. So now my strategy says that if I got stopped out and the ABCD pattern is still valid, and it is because the price hasn't come down below point A, which is somewhere down here, then I have to take the next entry. So that's what I'm looking for right now, is the next entry. And then a few other stocks like TIGR popped up on the screener. Nice ABCD pattern. Again, I mentioned that earlier in the video. I missed the entry, and that would have been a successful 2-hour trade. And while I was trading, I just didn't realize it actually hit the target. That's one of my other kind of built-in things to my plan, is if I have an entry that I missed, but as long as it doesn't hit my target or my stop loss, I can still enter if the price comes back down to where I would have entered. But here I screwed up and didn't realize it did hit my 2-hour target, my would-be 2-hour target. All right, so here, so these entries got triggered almost simultaneously. So I kind of just missed the SPCE entry, but it's very close to where I wanted to get in. So I went ahead and triggered my hotkeys as soon as I could. And I only got a few cents slippage there, so it's not a big deal. And then here, kind of the same thing. If the stocks are strong and the patterns are strong, a few cents slippage is not going to matter. So as long as I haven't missed it by a bunch, it looks like here I could have waited a little bit and got, you know, something closer to my ideal entry, but it didn't matter. This trade ended up working out. So it actually made me a little bit more profit because of that slippage. So again, that's, you know, if you're trading a good pattern and you're using good risk management, a little bit of slippage doesn't matter. All right, so let's see. All right, so here's the TIGR entry. I got in for the break of this 1-minute candle, which is near where I would have entered back here, but didn't realize that this thing already went to 2R after that level. So that this trade is invalid. It will go on my spreadsheet, but I will outline it as an error trade. So it's still going to affect my win rate. I'm still going to have a 50% win rate for the day. But, you know, we can look back and see, okay, it was 50% instead of 66% because of that error trade. So let's just watch the trades. I don't have the spreadsheet yet, and I'll develop it after I make this video, and I'll show it to you in the next video. But this is just the first day trading this plan, so we're going to take this to 100 trades, at least until the market conditions change. So this, like I said, this is for trading while the market is trading at all-time highs and is choppy. But if there's a huge correction at some point, I mean, we could still trade this. I think this is a plan that should be more applicable to a wider variety of market conditions. The other plan will definitely work and be profitable in kind of a correction, a market correction, but this should be applicable to pretty much everything except for during, you know, a drawdown. You're probably going to be at best break even if the market is in a major pullback. So let's just watch these trades. I'll fast forward a little bit because they did take some time. Again, everything moves a little slower with these mid caps. I was just making sure at that point that I had already lost one trade, so I knew. Now here's my other rules and the plan is that if one of these hits the 2R target, then I stop looking for entries. So at this moment, I'm still looking for stocks on the screener, and I'm still looking for other entries to take. You know, for example, if FSR would have broken out, I might have taken an entry, but it didn't. And the other thing is if I lose 3 trades in a row, or if I lose 3 trades period, then I stop looking for entries. So there was no more entries for me to take, and that was just coincidence. It wasn't because I was in these trades. Let's fast forward. Oh, so here, TIGR, I had realized at some point that my stop wasn't in the correct place. So I moved it up to 25.09, you know, which is just a couple cents below this candle. It was a little bit lower than it should have been. So I adjusted that with the 2R calculator and moved my profit target to the appropriate level, 26.17. That's a good thing to do, like when you're running multiple trades like this. You know, when you have a chance, go back and check, make sure that your stops and your targets are in the right place, that you entered things in correctly into the 2R calculator, because any mistake could cause you to lose money or lose a trade. Yeah, I guess I never did move these orders at all, because you could see my profit target was nowhere near the appropriate level. So, all right, so now let's just fast forward. You could see the SPCE is breaking out. And then FUBO is also just going sideways. Let me say this. This is really important. Risk management is everything. If you don't have good risk management and then stick to it, you're not going to be profitable in the long run. And here I could have said, hey, you know, FUBO broke out here, but now it's looking weak. Let me pull my target down and take a smaller profit, you know, a 1R or something like that. Now, if I would have done that today, I probably wouldn't be profitable, but I didn't do that. I just stuck to my plan. I let the price either hit my 2R target or my 1R stop loss, my minus 1R stop loss. And in doing so, I have made a profit today, even with half of my trades losing. And that is the idea behind risk management, that you can lose more trades than you win and you still are profitable. So with this risk management, so let's see, I just passed over the SPCE and FUBO almost got hit at the same time. Let's just watch those really quick. It looks like FUBO gets hit first, I believe. Nope, SPCE got hit first. So you can rewind the video if you want to see that get hit. And then FUBO got hit just a few seconds later. So now at this point, I can't lose today, because that's 3 trades done, and 1 was a loser, 2 were winners. And if this one loses, I'm still a 50% win rate. And with a 2R risk management, you can't lose with a 50% win rate. So 33% is break even. So I don't really care about, you know, what happens to this trade at this point. Sorry, that's my alarm to tell me to stop looking for trades if this didn't play out. So anyway, this trade loses, but doesn't matter because of my risk management. So let's fast forward. And it's going to get hit right there. So there it gets hit. No big deal. Everything went as planned. And we're all done with trading at that point, because we've already hit 2R on at least one of the trades. Once I hit 2R on at least one of the trades, I stopped looking for any trades. Also, if I lost 3 trades, I would stop looking for trades. So, but anyway, all done with trading here. I don't have the spreadsheet ready yet, but I can show you on my accounts page the trades and the orders and stuff. So the P&L for today, again, we're just doing 1 share test trading, so the P&L doesn't mean a whole lot, but you have to ignore SPXL because that's a swing trade. But here you could see my SPCE and FUBO. There was 2 trades there, 1 winner, 1 loser, and you can see I'm still in the green because the second trade was a 2R trade. And then on TIGR, that was just 1 trade and it was a loser, so that's minus 40 cents. 66 plus 15 is 81. So we made 81 cents and we lost 40 cents. So we're even at a 2-to-1 ratio with the P&L, even though we're just trading 1 share per trade, and that doesn't really show us what the real P&L will be when I'm trading full position size. So that was kind of just coincidence, but still interesting that even the P&L came out to be 2-to-1. The main thing we're going for right now is to get a win rate better than 33% in the long run, so that we know this plan is profitable. So that's it. And let me just scroll through the rest of the plan really quickly. Make sure that you can see the whole thing here if you want to kind of pause and read through it. Everything is almost identical to the other plan, except for I extended the time to 10:30 because the mid caps move slower than the small caps. Everything else is the same. I updated this, just put a little more detail on this rule number 1, and that's pretty much it. Everything else is the same. So let me know if you have any questions about this plan and the reason why, I changed and all that kind of stuff. I just figured this is a better use of the time because I knew the other plan isn't really going to work well until we're in a market correction. So might as well use this time to trade something that at least has a chance of working. So we're 4 trades in right now. We've got 96 more to go to prove this thing, but so far so good. And as always, no matter what you're doing, if you're test trading, if you're trading full position size, if you're swing trading, trading options, always have a plan going into every single trade. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.